of our YouTube channel. It is another weekend for our weekly analysis where we talk about what happened in the market and what we expect of the market the previous week. And at the end of the week, what actually comes to fruition. Today's date is 20th of April 2025. What the analysis for today will be what I'll be using for 21st till 25th of April 2025. So without wasting much of our time, we go straight into our chart. As usual, we start with our DXY, which is our dollar index. As of last week, I was interested in dollar index gravitating into 100, 500, 100, 500, but the market price still stays below 100, 500. So how will I translate this? I'm watching this blue box here. This box was generated from the weekly time frame. So I'll be watching the midpoint of the blue box. The midpoint is around 98,500, I think. It's around 98,500. Let's go to the weekly chart. 98,500. I'll be watching how the market will react at 98,500. The blue box was generated from it was an order block on the weekly time frame. This is it here. This was the origin of the blue box. So I'll be watching how the market will react to the midpoint, which is the mean threshold, of the what of the order block. So I'll be watching how the market price will react at 98,500. The moment 98,500 has given way, then we should be able to see 97 big figure. 97 big figure. But the moment 98,500 holds the price, then I'll still be interested in 105. 100 and 500. That is 100.500, which was the previous week's bias. So if the market is really heavy and does not give the opportunity to relax a bit, then we'll be interested in 97 big figure. Then we should be able to see 96.532. But if the market price stays above 98,500, then I'll be watching 100.500. So that is that. Let's go to our cable, which is the GBP USD. Last week on GBP USD, I was interested in the market price if it could gravitate into 1.33, 1.33 thousand or so. 1.33 thousand. If you see a movement into 1.33 thousand, as long as the market price stays above 1.29 thousand, you should be able to see 1.33 thousand. And the market price was short of 1.33 thousand a little. The high of this candle, the last candle, comes in at 1.32989. That was a little movement into 1.33 thousand. So that means the coming week, I'll be interested in the market price attacking this yellow box. I want to show you the origin of the yellow box. Okay, it was run on the higher time frame. So I'll be expecting the market price visiting that level. You can see this was the level here. This is a volume imbalance. This was a volume imbalance here. So I'll be expecting the market price visiting at least the midpoint of the volume imbalance. No, go back. Let me extend it to the right. Why are these sending links? So I'll be watching how the market price will react to the midpoint of that level. If the market price was able to touch that level, that means we are taking out this high. We are taking that high. The moment the market price was able to cross into this yellow level and take out the consequent encroachment of that volume imbalance, then we should be able to attack the high at 1.34343. So our point there is 1.34343 and a movement into the volume imbalance, the weekly volume imbalance, at least the consequent encroachment of the weekly volume imbalance. That means 1.33 thousand still remains on my radar. So if you see movement into that level, fine. I think that is what I will be watching personally. That is what I will be watching personally, at least for the rest of the month. So if at all the market should see a lower price, I think 1.31 thousand will be the next. 1.31 thousand will be the next on the downside. 1.31 thousand on the downside. But on the upside, I'll be watching that high as 1.34343 and the midpoint, which is the consequent encroachment of the weekly volume imbalance. Am I clear enough? Then we go to our fiber, which is the Euro USD. Euro USD last week I was interested in the market price giving us 1.11 thousand. 1.11 thousand on the downside. 1.11 thousand. But the market price was still above 1.11 thousand. So how do I do this, or how do I decide with this? How I will make my decision. I'll be watching, does 1.12757, is that level ready to be a support to the price that will take us into this high here? That will take us into 15,000. 1 point sorry, my 1.15 thousand. 1.15 thousand, as long as 1.12757 remain a support to the price. If it remains a support to the price, that is what I'll be watching. But if the market price was able to pierce through 1.12757, then I will be watching 1.10 thousand. No going back. But that means if 1.12757 turns to be a resistance, then I'll be watching 1.10 thousand. So that is that. Then on S&P 500. S&P 500 last week I was interested in 5500. 5500. So I was interested in 5500, which was a movement into, which should be a movement into the consequence encroachment of this volume imbalance here. So 5500 was not visited. So that means I'll still be interested in the market price at least visiting that level. at least visiting that level. That means I'll be sticking to my previous week's bias. So then into Dow futures. Dow futures, I was interested in 41,000. I was interested in the market price visiting 41,000, but the level 41,000 has been shied away. So that means I'll be sticking with the same buyers for now. I'll be sticking with the same buyers for now. So I'll be with the 41,000 level. I'll still be watching the 41,000 level. I'm sticking to that bias because we are approaching the end of the month of April, and we are also approaching the beginning of another month. So there are things that could happen that will happen to be um what is it called, a kind of seasonal changing. So that is why you don't just trade blindly. You need to know what is happening on your charts before you push the button. So that is that. I will be sticking with that bias on S&P 500 and on Dow futures. The same thing would happen on Nasdaq, because on Nasdaq last week I was interested in the market price finding its way into 20,000. Is the market ready to crawl back into 20,000? So 19,500 and 20,000 was what I have on my radar. So 19,500 and 20,000 is what I have in mind. So that means I'll be expecting the market price to still visit 19,500 and then 20,000. So if anything could change, I'll know how to go about it. So gold. On gold last week I was interested in 3,100 remaining in support, and we should be able to see 34, I think, 3,400. So the market price still trades above 31,000, but we are yet to visit 34,000 officially. Okay. 34,000, we are yet to visit 34,000, 2,400, sorry, 2,400. So 3,400 was short of some movement, because the eye of this candle comes in at 3,357. So 3,400 was short of some movement, sorry. So that means I'll be sticking with my previous week's bias. Wait. Then on BTC, the last but not the least, I'm still interested in the market price of BTC visiting its 8,000. I think it's just going around 85, 84, 85, 84, 85, 84. So the market is still range bound. The market of BTC is still range bound. So we have two levels here. I can see 83. I can see 83,000. That is the lowest hanging fruit on the downside, while 87 is the lowest on the upside. So I'll be going between 83 to 87 on what? On BTC. So I think that will be all for today. Thank you for coming this far with us. Thank you for being part of the family. We really love and appreciate you all. A quick disclaimer before I leave: I am not a licensed financial advisor. Everything in this video is for educational purpose alone. The fact that I have my money behind it does not mean you should do the same thing. Trading the forex market comes with a lot of risk. What the social media portrays about forex is that it is a get rich quick scheme. But I will tell you and put it to you that it is a lie, a very big lie. It is a bogus claim because it is not a get rich quick scheme. But if you should keep on practicing and sharpening your blade, it is a must, guaranteed. It is a must get rich scheme. So thank you once again. Thank you for coming this far. I really love and appreciate you all. Thank you. Bye for now. Be safe and trade responsibly.